June 2019, it's Thursday, guys. Tons of stuff to cover. A lot of things are starting to look very interesting. So buying the dip continues. We're seeing that across the board. We're going to give you a few examples in just a second. Couple of very important observations. At this point, it appears to be that the expectations for the G20 could actually move the markets because the expectations are so low that any kind of positive thing that will come out as a result of these G20 minutes could actually propel the markets higher. Sometimes it's just the lack of negatives or further negatives that cause the market to rally. So as long as we don't get anything crazy, the markets are going to move higher. There's a lot of things that point to this. With that said, remember the crazy number for the week. The most important number for the next 48, 72 hours is this number, 16.53. Guys, this whole bull case is completely off if we're getting another bear move today and if the VIX actually breaks the level of 16.53. Now, the probability of that is not high. The probability of that actually happening is maybe 10, 20%. There's 80% probability that VIX will fail because it has done so over the course of the last 2 months. Each time it has gotten here, it has failed to break out higher. So, with that said, Bitcoin has been a very strong leading indicator. If you're on TD Ameritrade GXBT, you can pull that up. I'm going to show you some charts in just a second. But basically, Bitcoin has been a great leading indicator in the last 2 years, starting December 2017, when Bitcoin literally showed the way that the market was about to crash. So since then, it has been a great leading indicator, literally predicting the next market move in S&P and overall the Dow Jones and NASDAQ, literally 2 to 3 weeks before that move actually materializes. So what's happening to Bitcoin is really telling us, hold on, there's a huge breakout in the making here. So multiple sectors are moving higher, and therefore this is making a really much stronger case for the markets to hit an all-time highs that is actually going to be sustainable. So we continue with our strategy of buying any dip in 29.20, 29.30 area, adding to any breakout above 29.69. Now, what we want to focus, as mentioned in previous few videos, there's a lot of sectors. And if you look across the board, guys, the analysts are going nuts. They are upgrading pretty much everything, even on bad news. So we got speculative assets like Bitcoin flying to the moon again. When you have crazy stuff like BYND, okay, that fails to drop immediately on bad news, which is still probably one of the greatest shorts out there. And I'm going to answer some questions that I saw popped up in the chat room yesterday. So we're going to talk about BYND in just a sec. But overall, it appears that your hot stocks, your FANG stocks, like Amazon and Facebook and so on, they actually have been lagging a lot of other sectors. It's the other sectors this time that we're reaching all-time highs again. It's the other sectors that have been moving the market, which again is great for the bull case and a more sustainable bull case for the market. But because some great stocks like Amazon has been relatively lagging, I think they're just about to break out higher. So the strategy is we're going to focus on tech because they have been lagging a lot of sectors, and we think that they are about to catch up. So the China trade clearly played BABA on the bull side. Shopify on this nice pullback, buy the dip. Amazon, buy calls. With the exception of, again, if we're getting another crazy move today, like another 2, another 11, or a 6, in combination with the VIX breaking out about 16.53, what you want to do is you want to cut all the call positions and you want to re-enter once we get some more clarity. And clearly, if we just do like what we did yesterday, yes, VIX slightly spiked above 16.53 for just about a few minutes. It reached 16.6, 16.59, and pretty much immediately after it did that, it started dropping like a rock. So we are likely to retest and do something similar like that again. So typically when you see VIX getting to this level of 16.5, 16.6, we're really making a strong stance here on actually adding to the call positions because, again, there's a low probability that VIX is going to break above this level. And if you have utilized that strategy over the course of the last few days, then you had some really great entries, guys, on the call side. So some of the observations from the earnings that we pointed out to yesterday got two very important sectors that will really facilitate the move higher in the markets, and that's Micron clearly impacted all the semiconductor stocks yesterday. All of them were flying higher. You know, your AVGO, ASML, NVIDIA, all of them were higher. Sometimes when you get a move like that right after the earnings announcement, the question is, will it be sustainable? And so we're going to glance at the chart from yesterday in the regular market session. So the same thing, right? The second huge sector for the markets to continue moving higher is the transports. And so FedEx has really handed in there strongly yesterday. Guys, for those of you that are falling asleep because you think the markets are moving too slow, I mean, here's an easy example. FedEx, that was in yesterday's video, right? We said buy calls on FedEx. So if you bought these right at the open, the stock was traded in the 153, 155 range. You should have been able to buy, no problem, these 160 calls at 40 cents. Well, within a few hours, guys, they were hitting pretty close to $2. So that's a 500% return. So, guys, there's no excuses there. Even in these slow market environments, if you focus on stocks, they have a particular catalyst. In this case, it was the earnings report of FedEx. We've talked in the last few videos about how, despite of the hugely negative sentiment in the stock, they're likely to buy the dip. So not only do we see the action of buying the dip after hours, but we're also seeing the action that they continued buying the stock, buying that dip in the 150 handle all the way until it reached above 161. That move in FedEx is likely to continue over the course of the next couple of months. Now, Micron, as you can see, goes above the level that was set, I think, right after the earnings announcement, it shot up to like 35, 36 areas. So throughout the day, it actually set a new high to 37.65. So both stocks from two completely different sectors are moving higher. They're showing exact same behavior. They're buying the dip, and these stocks have been beaten up pretty badly, guys. So at these levels, institutions say, hell, we don't care what's going on with China. We're just going to buy these stocks right here. So as long as they're going to do that, basically, the market is going to have a very hard time falling. So look what I am to Boeing this morning. Jesus, they're buying bad news in Boeing. Look at this. What does this look like? This looks like a move 13. Dip followed by a bounce. That's a buying the dip type behavior on Boeing this morning, pre-market at like 6, 7 a.m. I mean, look at this, guys. I mean, you cannot confuse this with anything else. It's buying the dip behavior continues. I mean, look at Bitcoin. Crashes to 3,700 and they buy the dip. Just look at this chart. Kidding, guys. Just making sure you're paying attention. Bitcoin did not drop to 3,700. Sometimes you'll see this crazy moves in the chart. It looks like it dropped to 3,700, right? And then they bought the dip. So I'm just throwing this in there, making sure you guys are awake this morning and ready to take action, because there's some good stuff going to happen today. So we're going to catch some really good trades. So Bitcoin does crash slightly to like an 11,000 range, and they don't let it roll much lower below that. Considering the huge move, it's reasonable. It's probably going to go all the way to 15K before a meaningful drop lower from there. So actually, again, if we were to take a look at Bitcoin historically, it's been a great leading indicator. So in the last 24 months, any move lower in Bitcoin was followed by the general markets lower shortly after that within 2 to 3 weeks. And any move higher in Bitcoin has been followed by the general markets in a move higher within 2 to 3 weeks. So what we're seeing right now is this move this is actually a 10-day chart on Bitcoin. So this move is actually a mirror of what the general markets are about to do. And so if, you know, the correlation has been so strong, and you have a ton of people talking about this saying no correlation. Guys, this has been a great leading indicator for me. I've used it many times. It has not failed me once yet in the last 24 months. So if something doesn't work out here, that would be kind of an exception to the rule. So I typically like to go with the direction of the higher probability. So in this case, the last 24 months, it hasn't failed. I don't expect it to fail this time. The question is, will the market actually dip under 2,900 before breaking out higher, or is it just going to automatically start doing literally in the next 72 hours, more like 48 hours, what Bitcoin has already shown us, what the market could possibly be doing very shortly here. So with that said, this is what we're looking at today, guys. If financials and tech begin to participate in the move higher, the move higher could actually be very fast and huge. So let's take a look at Bank of America. There's actually a couple of ways to look at this. There's a bear way to look at this and a bull way to look at this. But this pattern of buying the dip, or in other words, oftentimes on the chart, will coincide with something that's going to look like a reverse head and shoulder. And yes, guys, for those of you that are not familiar with the charts, guys, we've got a 6-hour chart course out there. Make sure you take it so you can understand these charts better. But basically, one way to look at this is the head and shoulder formation. Another way to look at this is this reverse head and shoulder on a shorter time frame. So get different mixed readings in the financials on various time frames. However, if we throw in some of these behavior when they actually bind the dip, you see this red candle that's sticking down with the tail down, that's a bullish reversal candle. And so when it's pronounced like this, I mean, this is a pretty large solid candle here with a huge tail sticking out. That tells us, look, at these levels, they're actually wanting to come in and buy. Now, there's plenty of bearish things, particularly in Bank of America on the chart, but that thing is just really messing with this whole bear case because it's not 100% there, and sometimes what appears to look like this, it just looks like, oh no, it really looks like it's about to drop, it's about to drop. It's really more like a consolidation type behavior in this reverse head and shoulders, and oftentimes you'll get the breakouts higher from this type of formations. So that's why we don't want to go 100% bearish here. If we take a look, let's say at Goldman Sachs, right, we're seeing the same thing. It's the reverse head and shoulder, and in this case, we actually have a higher probability. Look at this candle, right? Same thing. These actually got a ton of bullish reversal candles going on right here. It's got bullish MACD as well. In this particular case, of course, Goldman Sachs chart looks a whole lot better than Bank of America. But what we're trying to basically take a look at a couple of charts of financial and see what is actually the probability that they could start moving high. Maybe not crazily high, substantially high, but I think it's reasonable Goldman Sachs because they'll revisit these levels of 207.5, at least 205. So small breakout high. What that's actually going to do is going to make a bullish crossover on the 50-day line and the 200-day line right here. So the blue is going to cross the orange on the way higher. It's going to be a bullish crossover. So bottom line, there's some signs that if financials start participating a little bit in this rally, we're going to get a solid sector participating in the rally. And historically, we did hit all-time highs when financials were in good shape. At least they were not dropping or participating in the move higher. And technology stocks were moving higher. So we're to look, surprise, surprise, at Amazon. Look at, what do we see? It's the same thing, guys. It's the reverse head and shoulder. Now, of course, between the financials and Amazon charts look way, way better. There's a lot more positive things going on. And, of course, it trades above the blue line, which is always more of a bullish type formation. So, but same thing, right? Even despite of the drop, look exactly where it stops. A couple of days ago, right? 1870 level. It's right on the blue line. Stops right on the dot. And boom, bounces. As a matter of fact, Amazon so far pre-market at like 5, 6 in the morning. It wasn't huge while we were there, feeling like that, guys. But it was trading already at 1916. It was really heading towards that 1920 level. And it's given up some of those gains. The market had actually quite a nice move, about 13, 14 points in SPX higher. And then they've surrendered most of those gains so far. So it apparently looks like we continue to draw the move 2 type of formation. But there's definitely signs that the market just really wants to hold this level. If it holds this levels for another day or two, this breakout could be really, really sizable. So position yourself properly. Now keep in mind again, not all days are going to be green days, even though the market is moving higher. But the good news is we're getting close in our analog here from 2017, 2018, you see these two white candles right here. Let me try to make this screen bigger. Okay, so we got this reverse head and shoulder, just kind of like I've shown you on the last three charts of Amazon and some of the financial stocks. There's your reverse head and shoulder. We are right here. Now we've been doing this couple of red days. We've already gone through this. So in the next 48 hours, we are about to see this, where the purple arrow is pointing right here, followed by maybe giving up some of those huge gains, and then another huge day higher. So there's some definite characteristics of a breakout. And if we compare this analog, if we're precise on this, which could be a day or two off here, but everything is pointing to this. Everything is pointing that the market is just about to do this. So unless we get this reading on the VIX, where it actually breaks out above 16.53, we want to remain bullish. So in the next 72 hours, we've lowered this lower range of the tunnel right to 29.21. It seems like 29.21, that's roughly where we've closed in the last couple of days. We've closed right around there. Then after the market closes, we actually make another move lower to about 29.14, 29.15, 29.17, and each time we make that move, it's followed by a quick bounce, just quick bounce, not a huge bounce, but just a quick bounce. So it tells you guys that institutions are sitting there, they're waiting, they're ready to protect that level. So again, the only condition where we are wanting to get out of the calls is this: if this level 29.21 gets broken down on heavy volume, if we're actually slicing through 29.15, 29.14 on the way lower, and at the same time VIX spikes about 16.53, this is actually the time to reverse your positions, okay? Not staying with the calls. But unless this condition is met, we remain 100% bullish in this scenario. So some questions about BYD. I guess it had to do with me sending the message that, hey, buy calls. But specifically, we mentioned that there are always stocks that are reasonable to short if the move in the stock is not due to the general market conditions, but rather than some catalyst that pertains to this particular stock. So you may be wondering, well, what the hell is the catalyst? I mean, aren't they like announcing some new products this week? And, wouldn't that just move the stock higher? The answer is no. Because historically, in some high speculative names like BYD, TLRY, Tesla is a great example. When it is a positive announcement that's coming out during the week, in this particular case, okay, we can compare this. Really easy parallel, guys. Tesla announcing a new product. What happens typically over the course of the last 3 years? Every time it has come out and announced a new product, the semi-truck, the convertible, the, whatever. There's a big party event going on. A bunch of people get together, a bunch of journalists, bunch of hype, and then what happens? Typically, in the expectation of this new product announcement, the stock goes higher. What happens after the event? The stock deflates like a balloon. So the fact that BYD is actually announcing some new products this week, the stock is already making the move. Yesterday, it bounced higher and was suggested, hey, this is where you want to come in and this is where you want to buy puts. So it's in the expectation of this, what appears to be positive news, the stock is moving higher. But as soon as that announcement, as soon as we get done with this announcement, the stock is going to tank. It's going to tank like a rock. The big move, we're expecting the reversal to start taking place today. We're expecting the stock to revisit this 130 handle, possibly 122, maybe even 108. Now, I'm not saying we're going to hit 108 by this Friday, but at some point next week, BYD can easily hit a level of 108. And if we look at the chart, guys, so if you're ever in doubt, just pull up the charts. Unfortunately, BYD is kind of a fresh stock, so there's not a ton of data on the chart, but you can definitely make sense out of this. If you study the divergences course, guys, you should go back, review the part of specific cases of divergence. You can easily look at this and make sense out of it yourself. So bottom line, what do we have? Well, as far as the chart pattern, what does this look like? This looks like a head and shoulder. Here's your shoulder, here's your head, here's your other shoulder. Now, the main characteristic is this, right? as the stock hits all-time high right here, coincides with the head part of the pattern, okay, at the level of 200, look what happens, right? This is a huge sell-off actually takes. It touches 200, starts selling off right away. Okay, now, look in this shoulder. When it was going through this shoulder formation, look at the volume. These gray bars, they were positive volume. A ton of people were buying the heck out of this thing. Now, look now. It's trying to bounce. Look what happens to the volume. Look how insignificant these volume bars are in relation to these bars right here. So the second time around, it's trying to bounce what appears like, oh my God, is this thing going to go back to 200? Well, the answer is no, okay, because it's not going to be able to stage such a stupid move back to 200 on such a low volume. Now, it doesn't mean like intraday it cannot spike 5, 6, 7, 8 bucks, but ultimately it will result in a bigger drop, like $20, $30, $40 drop in this thing over the course of the next 48 hours to 7 days. So just position yourself properly. Again, the strategy is the closer to the money you buy in this type of market environment where VIX, you know, is still in that trading zone, in that trading range between like 13 and 16, unless we get a meaningful breakout higher in the VIX, it does not really pay to buy a ton of options out of the money. So as long as you stick to the money, buy yourself a little extra time and expiration, guys, this is a no-brainer. This thing is going down. And if you take a look at the accumulation distribution, right, what do you see? You're seeing higher lows. So in other words, each time it goes higher to the same levels, look what happens. There's less and less people are interested in buying the stock, number one. Okay, and for the most part, between the level of 200 and 140, there were a lot of people that were interested in getting rid of this thing. And now this spike, this bounce is where you want to come in and where you want to short this. It's also confirmed on the MACD. You got a bearish crossover. The black line is crossing the orange line, so that's a death cross. So preceding death cross on MACD tells you the drop-off is near. Okay, so hopefully I answered that question. So the answer is, even though we are bullish on the general market, we are going to be bearish in certain stocks, and this is definitely one of them. So market move yesterday for June 26 was a move too. Basically, pretty much an identical move from what we've seen the previous day. You got a market trying to go higher in the first hour of the market and start selling off, creating a series of lower highs, lower highs, lower highs throughout the day. Now, again, unfortunately, it's happening on a very light volume. All the sellers we had, they've been happening in a very light volume, which is actually bullish. So what we've got here, this is the picture from the previous day. I said those pretty much identical moves, right? The sequence is 2-2, highly bearish. But when we take a look, you should not interpret these sequences without combining them with the VIX. So if you guys have not taken the 13 markets move formula, like you really need to go through it and study it and understand it, because if you're just paying attention to the market moves, but you're not really combining it with the VIX, it's going to be really hard to identify your high probability days where your probability is going to be 90%. And they're coming, guys. We have not had one of these high probability days in over a month, but it doesn't mean that it's not going to take place like literally in the next few days here. So sometimes the market just gives you some awesome opportunities. Sometimes you got to be extra patient. You got to wait for them. But the bottom line is we got two consecutive bearish moves. They happen on low volume, and the VIX is failing to break above. So should we expect a crash in this particular case? There's some things point to it, but unless the VIX starts doing the right thing in combination with this sequence, then we could have another failure. I pointed out in the video yesterday we had a sequence that was very close to this one. Literally 2 weeks ago was 11 to 11 sequence, which is almost identical to this, because in this one we're getting on a 5-day sequence, we're getting 7, 11, 5, 2, 2. So kind of a move of indifference here. Of 5 where the market just doesn't do anything. So we're to really read through this 11 2 2. It's almost identical to the 11 to 11 sequence. It's highly bearish, but it doesn't. The market can easily crash. But these sequences failed 2 weeks ago because VIX has failed to break above 16.53. Otherwise, everybody would have made a ton of money. So this time we got to pay very close attention. If VIX indeed does break above this crazy number, 16.53, then we should be taking this sequence very seriously. Until then, we remain bulls. On a 5-day sequence, this is how it looks. And guys, when you look at a ton of charts, and you see the same thing happen again and again and again. What are we talking about here? On a 5-day chart, what do we see? We've seen another reverse head and shoulder resemblance, right? Just as we hit this 2914.5. I pointed out over the last few weeks many times where the market did that and then it reversed out of that significantly higher. I think we're getting another instance of that right here, right now. So expecting a transition today from the lower part of our trading range, guys. So our trading range, 29.15, 29.14, 29.21. So this is that lower part of the trading tunnel to a higher. So tomorrow, Friday, because of the crazy lowered expectation for anything positive that could be coming out of this G20 meeting, the market could actually move higher. Maybe the institutional investor is going to finally realize, hold on, what if something good happens? Maybe we should go ahead and buy some stocks ahead of the meeting. So in that case, we can start getting the move higher today, followed by a bigger move tomorrow, Friday, the 28th, which could put us really close to this 29.50, 29.60 level, and the market would be positioned to a potential huge breakout higher on Monday, Tuesday. Okay, so right now we're still in this consolidation to break out. I know things getting scary because things are like, whoa, man, I mean, it just keeps doing 2 and another 2 after that. So what's the next market move? Today, we think, again, we're going to start transition from the lower trading range to a higher trading range. So there's a high probability of 11, high probability of 1 or 7. We're not discounting the probability of an 11 where we can still get a reversal of the move. So if we do get an 11 or another 2, it really tells us, hold on, something is definitely not right here, especially if the VIX goes above that 16.53. So 16.53 fails yesterday, just as I sent out the message saying, hey, buy, buy, buy. And I sent that message because VIX was failing that level one more time. So if it gets to 16.53 today, guys, it makes it for a simple, easy strategy. That is your area. When VIX gets about 16.5, 16.6, that's where you want to buy calls. And if for some reason it does break, some crazy reason, above 16.7, 17, by the end of the day, you know, just cut it. Just cut it and reposition yourself, wait for a better entry. So will it retest 16.53 one more time today? Yes. Pre-market so far, this is how VIX looks. Huge gap down and then followed by a couple of moves. This level just seems to be such a difficult level for it. There's a very low probability it's actually going to break above that. So the key takeaways, same thing. Focus on buying intraday dips. Not giving you a perfect zone to get in, 16.53. Be patient. Get more time on expiration. So if we should trust the Bitcoin as a leading indicator one more time, and has not failed us in the last couple of years, if we trust it one more time, we're fixing to get a huge breakout in the market. Okay, VIX should not be breaking above 16.53. That's the condition of how we maintain our position. And basically, guys, pay very close attention. If huge reversal is going to come, then it makes sense to get out of your calls, reposition yourself, and time for a better entry. Until we get these confirmations, we're staying bullish. We're going to trust the Bitcoin indicator. We're going to trust some of these patterns that I've shown you on many different charts here today, in many different sectors, right? They're all drawing the same pattern. It's buying the dip, confirmed across the board everywhere. Even on bad news, they're buying Boeing this morning. Even on bad news, they're buying AVG on bad news. They're buying everything no matter what the news is. So this market is about to turn wild. So it gives us a chance to first play it on the bull side. And then, guys, this is where things are going to be totally awesome. When after this crazy move higher, just like what happened again in our analog, in January 2018, the market tops. We go short, and guys, I have such a good feeling that millions of dollars will be made among many of our subscribers. So stay strong, guys. Be patient. Let's roll. Let's have an awesome day. I'll see you in the next trade tomorrow.